When we put in these plans, we believe that we have a relationship with our clients till death do us part. Premium finance actually is an issue of paying for a life insurance premium using third-party debt or some third-party debt and some equity or cash contributions. Historically, people have purchased their life insurance with after-tax dollars, paying premiums, or sometimes in instruments like pension plans where there is pre-tax dollars. And one of the things that people and some of the people that promote the purchase or the sale of it, they say this is free insurance. It is not free insurance. That is an absolute myth. There is risk, there is liability, and you're just using someone else's dollars for a period of time. They want to get paid back, and they want to make sure that they are secured. Banks don't lend money because they want to take risk. The lender says, I want to know that if you quit for whatever reason, I get my money back. So I need collateral to support that, plus the interest or any fees that are accruing on that loan. We've deconstructed policies and we look at it a little differently. Our view is if you're a healthy person being underwritten for new insurance today, you're likely not to die in the immediate future. You're likely to be alive for your life expectancy or beyond. A much more efficient way for you to buy insurance when you're financing is to have very high early cash values. So our design says let's have the least amount of insurance with the most amount of cash value, particularly for our clients who have a desire to build a living benefit and use this as an alternative asset class. We have spent enormous amounts of resources, talent, money, energy, relationships, and have built out this incredible ecosystem of supporting these programs long after they're sold. This amazing structure allows us to work with our clients and their advisors to make sure A, they understand what they have, B, they know what the risks are, C, they understand what the opportunities are to manage it. For example, in a product where there are investment alternatives, there are a bunch of assumptions that go into it. Our clients and their advisors typically are not expert in that. They're relying on us to help them understand what the decisions are and the ramifications of that. It's life insurance. There are lots of things we're doing to create value today and near term and living benefits from that. But it's a long-term play. I tell people, if you're going to do this for less than a decade, don't do it. It's a bad deal. Somebody that tells you you're going to make all this money in 3 years, this is not a hedge fund or a private equity fund or an investment that's going to return a rapid return in the near term. Other than if you die, it's a great return, except for you, not something you want to think about or invest in. But over time, if this thing is managed right, and we are doing this, we're in our second decade with a number of these plans, the results will do what we say, and a lot of that is because we are so diligent about staying on it, and every month, every one of our clients is in touch with us, and we're working with them to make sure we're tuning everything they're doing to meet their objectives.